You think you're paying zero in U.S. taxes, but if you're a self-employed nomad, you're likely writing a check for $18,000 every June. Most Americans abroad treat the Foreign Earned Income Exclusion as a get-out-of-jail-free card. But heading into 2027, the IRS is closing the gap on the one tax the FEIE cannot touch. Subscribe. New Nomad finance strategy drops every week. The Foreign Earned Income Exclusion, or FEIE, is the most misunderstood tool in the digital nomad arsenal. In 2026, the exclusion limit has climbed to approximately $133,000. Year 2. Most high-earning nomads believe that if they stay under this threshold and pass the physical presence test, their tax bill is effectively zero. However, the U.S. maintains a worldwide taxation system that follows your citizenship regardless of where you choose to live or work. Unlike 2025, the 2026 tax landscape is seeing stricter automated enforcement of the distinction between income tax and social taxes. While IRS Form 2555 successfully wipes out your federal income tax obligation, it does absolutely nothing for your self-employment tax burden. This is the fundamental trap. The exclusion only applies to the income portion of your tax return, leaving your payroll contributions fully exposed. Let's look at the raw math behind the $18,000 trap. If you are a digital nomad running a simple sole proprietorship or a single-member LLC, the IRS views you as both the employer and the employee. 5. The federal government mandates a 15.3% tax for Social Security and Medicare on all net self-employment earnings. Because the FEIE only excludes earned income from federal income tax, these payroll taxes remain due in full. For a nomad earning $120,000, your self-employment tax liability comes out to exactly $18,360. This is cash that your Wise or Revolut exchange rates won't help you save. Many nomads are shocked to find that even with a zero income tax return, they still owe enough to buy a new car every single year simply because they are American. Qualification for the FEIE in 2026 is not a one-time setup. It is a daily commitment to staying away from U.S. soil. To pass the physical presence test, you must be physically present in a foreign country for 330 full days in any 12-month period. 7. This gives you exactly 35 days, including travel time, to visit family or handle business back in the States. One delayed flight or an emergency trip back home in late 2026 can instantly disqualify you for the entire tax year. If you fail this test, you lose the exclusion for the entire $133,000. Suddenly, you aren't just paying self-employment tax. You are paying full federal income tax on your entire global earnings. If this is saving you money, hit like. It helps more nomads find this channel. Without a bona fide residence in a place like Panama, Paraguay, or Georgia, you are tethered to the calendar until you reach day 331.13. The solution to the 15.3% trap isn't working harder. It's structuring your business for 2027 reality. Sophisticated nomads avoid this by using a U.S. S-Corp or an LLC taxed as 1-4-8-day. By paying yourself a reasonable salary and taking the remaining profit as a distribution, you only pay that payroll tax on the salary portion. For example, if you earn $120,000, you might pay yourself a salary of $50,000. You apply the FEIE to that salary, paying zero income tax. Your self-employment tax is then only calculated on that $50,000, saving you over $10,000 in a single year. While a Wyoming LLC costs about $100 to maintain, the tax savings are astronomical compared to a simple sole proprietorship. Remember, the FEIE is not a universal shield. It only covers earned income like wages or freelance fees. It does not cover dividends, interest, capital gains, or rental income. If you are building a FIRE portfolio via Interactive Brokers, your investment income is fully taxable in the U.S. from $1, 9, 10. In these cases, the Foreign Tax Credit, or FTC, might be a better pivot if you are living in a high-tax jurisdiction like the UK or Germany. The FTC allows you to credit the taxes you pay to a foreign government against your U.S. tax bill. As we approach 2027, the nomads who win will be the ones who know when to switch from FEIE to FTC to protect their passive wealth. As we look toward 2027, the IRS is increasing its focus on offshore transparency for the digital nomad class. This isn't just about what you earn, it's about where you keep it. If you have more than $10,000 in total across foreign accounts, including Wise or local bank details, you must file an FBAR annually. The penalty for a non-willful failure to file can still reach $10,000 per year. Sophisticated nomads use the BSA e-filing system to stay compliant. By combining a Wyoming LLC structure with a meticulous FBAR filing, you ensure that your global lifestyle remains a wealth builder rather than a legal liability. You now understand the $18,000 trap and why the FEIE alone isn't enough to protect your nomad wealth. Failing to structure your business correctly is the fastest way to lose the gains you've made through geo-arbitrage. In my next video, I'm revealing the 3 offshore LLC structures that cost under $500 to set up in 2026 and are fully compliant with 2027 rules. Subscribe so you don't miss it. It's the legal key to keeping every dollar you save.